Welcome back, everyone. My name is Adam Rusmin.
Hello.
Victor.
Hi, everyone.
Thanks for joining us again. And today we're going to talk about what kind of stocks you could possibly look at during this whole messy situation we have in this trade war. Some of you have commented, hey, what kind of stocks are you guys looking at? What's your watch list? Because we talk about how you should have a watch list, prepared just in case like prices drop, you just go right in. So we can't give you like companies to invest in because we don't give any recommendations. But what we can do is you want to look for the qualities in the types of companies you want to look at that would be most likely resilient during a trade war. So we're going to cover some of these like qualities and what kind of companies you could look at. All right. So let's start with the first one.
I think the company that we usually want to pay attention to, or rather we usually invest, is that we want to invest in companies that have very strong pricing power. Okay, so which means that if the tariff really hit that company, right, from the item that they source to sell it to the consumer, they can always increase the price to pass on the cost to the consumer. Okay, and one company, as example for this type of category, would be company like Hermes. Right, so I think we all know Hermes is a ultra high net worth kind of segment where they really reach those consumers that can really afford to buy a bag that costs 5-figure sums,
6-figure sometimes,
6-figure sums sometimes, right, at Birkin bag. And that company, I mean, they already announced that they're going to pass down the tariff impact to the consumers, and they have sort out the price range across different product, the percentage increase as compared to 2024. So you can see that they are going to increase at a range of between 6 to 7%. Okay, so that increment will help them to offset the tariff impact. Okay, so this is the type of company that I think will be able to weather through this downturn very well. Okay, and it's a bag where I think even former Prime Minister of Malaysia, Najib, the wife, loves to carry, right? So they have a very strong brand equity.
I think a lot of famous celebrities, famous people, rich people like Hermes, and prices go up, they're not going to complain because they can afford it. Because if they're going to complain about a price increase, it looks a bit malu lah, right?
The more they raise the prices,
they want it more.
They want it more.
Yeah.
Okay, so that's interesting about this particular market. All right, so this is just one example of the businesses that have a strong pricing power.
And what about Apple? So Apple for a long time has pricing power because they've been raising prices of their iPhones, and then people still buy them. But they're a company that's going to be affected by the trade war because a lot of the manufacturing is in China. So how do you balance something like that?
I think for Apple, yes, they can pass down the price, the cost, right? Increase the prices for the iPhones in the US, but that's going to be very costly, right? That's why I think US government has temporarily given an exempt to Apple because 80% of their phones come from China. So it's going to take time for them to shift their manufacturing plant out of China. The whole entire supply chain is going to, I think, take at least many years. That's why now they are under that exemption list. Okay. So if let's say US government, after the 90 days, they decided to hit Apple, which I think is highly unlikely, right? They might come into a negotiation table with China and then agree on the rate that will apply for semiconductor product, for example. So, but at the end of the day, I think whether they will be affected or not, I think chances are pretty high because China and US are in the constant trade war since 2018, and I just think that Apple at this current valuation is still very expensive, or rather reasonably priced. And late last year, and early this year, it was quite very expensive, right? It's at all-time high in terms of valuation. But right now, even if let's say they were affected and the market really sell down heavily to a price where the valuation is so attractive, that might be an interesting place to look at. Okay,
so you still look at Apple even if they are affected by the tariffs, because the price makes sense in terms of the stock price.
Yes.
But the business as a whole, if it really gets hit by tariffs, they can't really avoid it. If there's no choice because there's so much of their manufacturing in China. And their pricing power isn't exactly like Hermes where they could raise it and no one bats an eyelid. But for Apple products, some people like you and me is like, it's so much more expensive. We might think twice about getting.
We might delay
your purchase. Stretch the life cycle of your phone and all that. So their pricing power is there, but it's not as good as Hermes, something like that, right?
So Apple, yes, has a good pricing power, but I think there's a limit on how much they can actually increase the prices, right? Because ultimately, if you look at phones, laptop, all these are essential.
So you still do. That's a plus point. Because you need to use these products, but I think if it's gonna go up so much, you would really, really like hurt to like buy.
I think their
something.
replacement cycle will slow down.
Yeah.
Right, because usually, I think in the past, I think people used to change the iPhone either on a yearly basis or every 2 years when there's a new phone come out, right?
Some people changed it every year, man.
Yeah, but previously was because they have this software that slows your phone.
Okay.
But after that, now your phone can last a long time before you even want to change.
Yeah.
So if people are very into trend and they like to change, maybe they used to change every 2 years. Now they may drag to 4 years or 5 years.
I took like 6 years, I think. And then this is my phone
My
was dying.
first-
Then I changed it.
My first few iPhones I change it almost every year.
Yeah.
And
So
then
you're one of
after
them, huh?
that, yeah, and after that I prolonged the cycle to
Yeah.
like 3 to 5 years.
Okay.
Yeah, and now it's getting longer and longer.
Okay.
Correct.
I think another point.
I also previously I was using iPhone 8 and only recently I think last year then I changed to iPhone. I don't know, is it last
Oh,
year
that's a
last year
long-ass time.
iPhone 15. Yeah, so it can last very long. After they stop slowing the software, I can last very long.
Okay. I think another point I can make is that in terms of like, I guess phones and laptops, there are substitutes.
Yep.
But for Hermes, there's no substitute.
Yeah.
If you want an Hermes item, that's it.
Yep.
You got to go to Hermes to get it. No,
Yep.
you can't go like, oh, I'm gonna settle for Louis Vuitton,
Yeah.
and it's not the same.
Yep.
Okay, so I think in terms of the pricing power, this is something that like maybe ultra luxury brands like Hermes
Yeah.
or Ferrari would have. you
Yes,
know?
correct.
Yeah.
So Apple has some sort of still a pricing power because it's quite difficult to switch out to Android based phone
Okay,
if
yeah.
you're so used to like iOS
Mm.
kind of system. So that's why the pricing power kind of hold. But then they target the middle class consumers, and once the job market start to weaken because of this tariff war, it will ultimately still affect their sales of iPhone, tablet across the entire product range that they have, right? So Hermes is very interesting because they are into this high ultra rich, right? And their product is branded as expensive, right? And the more expensive it gets, again,
The more attractive it
the
is.
more attractive it is. Yeah.
So it's slightly different.
Yeah.
All right. So pricing power, definitely one quality that you want to have in a company that's going to be, I mean, in general, regardless of a trade war, this is a quality that you want a company to have because it makes for good revenues, good profits over the long term.
Yeah.
Yep. Okay. Let's move on.
I think the next one probably is more like critical type of business or essential business like your insurance or your transport. Like let's say talk about transport. Like if the trade war were to happen, it becomes very serious. At the end of the day, you'll still take your buses and your MRT, right? So then companies like SBS Transit, their share price is definitely affected if the trade war become very serious, right? But their business is still making the same amount of money. You still have to take your bus, you still have to take the train, right? They are still making the same amount of money, and there's still more lines that will be coming up for them to manage and all this, right? So these are what I feel is like critical, right? That will not be affected because they are just within the domestic Singapore. Or some others we can talk about is like insurance business.
Okay.
Right? Insurance business, you don't care whether it's trade war or not trade war, you still have to pay your insurance, right? So like for instance, like US they have this company called like Brown & Brown Insurance.
Okay.
So Brown & Brown Insurance is basically they are not exactly an insurance company that underwrites. They are sort of like a middleman, right? Their client can find them, then they go and find the most suitable insurance to help for the customer. Then they get the fee from the insurance companies, right? So they are like a middleman, sort of like they are bridge between the insurers and the customer. So it's asset-light business, right? And usually they do it for businesses also. So and it's critical also because they need to get the underwriting for the business and all this. And all these are still have to be paid, right? And they make money from the premium, right? Recurring from the premium that their customers getting and all this. So they won't. I feel that the trade war happened, they won't be that much affected.
So there's certain industries you're saying that basically are critical for life or business.
Yep.
And especially if they're just localized in the domestic market.
Correct.
They're not going to be affected by trade wars in that sense.
Brown & Brown is basically 100% in US.
Yeah.
It's just domestic business,
Alright.
right? Or if not, we can also look at companies in Singapore like medical companies like Raffles Medical, right? I mean, if there's trade war get worsened, you still have to go to see a doctor. If you need a surgery, you still have to.
And there's
you
some
cannot
pricing power
bargain,
there
right?
as well, right?
There's definitely pricing power because you can't bargain with the surgeon that, oh, I got a tumor, can you cut half and give me a discount? There's no such thing, right? Right. So medical always have pricing power, right? Yeah.
So even like if they import medical equipment, because that could be under tariffs.
Yeah.
Yep.
For example. But you, like you say, you're not going to bargain with the doctor.
Correct.
You still have to use the equipment
Yes.
for whatever it is.
Yeah.
Yeah.
So like healthcare, transport, consumer staples, would that be something that's essential as well?
Consumer staple, yes, I think, but I'm not so sure whether how their raw material will be
okay.
affected in terms of the price increase and all this. If it is right, but I think depends on, like, let's say if example is like Nestle or this, right?
Yeah.
They are able to pass down the cost, definitely, but they cannot increment too much,
yeah.
right? If not, people won't go and buy. They still can increment, but they do it on a yearly basis until they hit the point where it balances out everything.
I think the point here for consumer staples is that it is essential,
Yep.
but they don't really have pricing power.
Yeah.
Because, for example, eggs in the US have been like going up crazy prices.
Correct.
If it's so expensive, you can, I guess, not eat eggs.
Yeah.
Yeah.
In that sense. So the pricing power isn't exactly there. So I mean, it's not exactly critical, but I mean, in terms of like your staples that you need to survive, you still need to buy them. But there's a limit to how much you can raise prices.
Yep.
For consumer staples, maybe I would just prefer to look at the platform-based business. So a platform like Costco wholesale. All right, I mean, we don't really have Costco in Singapore or even Malaysia. But you know, the Costco in the US, in Canada, or even in Taiwan. I mean, if you've been to Costco before, you know it's a fantastic place to shop, right?
Yeah.
And a lot of times when you go into a Costco, they sell things in as like a wholesaler, right? They sell items, those daily groceries needs, and you can actually buy them in bulk and at almost like a supplier price, right? And that has been their selling value proposition. And a lot of items that you see on the Costco shelf, all right, most of them, they have a markup of, on average, they call it a 14% markup rule, right? And they try not to mark up too much. And the whole business model and how they actually make money for Costco is actually not from the item, the merchandise item that they sell to you at the supermarket or the wholesale shelf itself, right? But it's more like their membership.
Yep.
Right? In order for you to get access to these very cheap items, all right, you need to join the membership, and that membership itself, I think, is cost like $100 a year for you know, if you want to join it in the US, and that membership has been steadily increasing over
every
time,
single year.
right? So if you look at Costco, the whole net profit margin is very thin. Right, largely because they don't really earn money from the product that they sell, but most of the money that they make is actually from their membership alone. And that itself has a pricing power, because as your job get affected, you're gonna visit Costco more because you want to save money. And when you want to save money, you go to, you know, the supermarket or the wholesaler that can sell you the cheapest item, and that's going to be Costco.
Yeah.
Right. And this is a company that, of course, you know, I've been waiting for a long time to buy because
You said it before. Yeah.
yeah, and you know, the valuation is still very expensive,
Still
right?
waiting,
So
right?
even though we highlight some of this company in this session, doesn't mean that it's time to get in. And then
So no recommendation to buy yourself.
Yeah.
You're
You
just
still have to
giving
look at the
examples.
valuation.
Yeah.
Right.
So we're just giving some example that, you know, it won't be affected by trade war. Some of the merchants that they put on the shelf, Costco, they might get affected, right? Prices can go up, but if that hits the whole sector in the whole country, at the end of the day, consumer have to accept it, right? And if they want to stretch out their dollars, they have to go to Costco.
Okay.
Right. So that is one of the business that's going to benefit instead of like being affected.
All right. So I'm looking at Costco's share price. So at the point of this recording, year to date, it's up 7%. So despite all the trade war and everything,
Yeah.
it's a very resilient business. Like you said, people go there for the cheapest stuff that they can buy.
Yes.
You've been to Costco, it's amazing.
Yeah.
And the membership fees that they charge is high margin. That's where they get a lot of the profit from as well. So they just a little bit on the physical items, but the membership is, I guess, where the profit is.
Yes.
Yeah, so Costco is a great business.
Yeah, but right now the valuation is very
Still
sensitive.
very high.
Yeah, so waiting. Right, so this is where you build a watch list. You wait until, you know, the market really start to panic. Even Costco get beaten down, and then you can really consider looking at it.
All right.
Yeah.
So we talked about some of the quality so far, so pricing power, basically essential products, and then we also talked about localized businesses in part of that. So let's talk about that. So a company that is very within its own borders, you don't really do a lot of trade. Tell us more about that one.
So if you look at like Brown & Brown, I think they sell insurance product that is within the US market, right?
Yeah.
So I think that isn't really like impacted by tariff. Of course, if people lose their job, they might scale back on some of the insurance that they have, but most of their critical one, they will still maintain it, right? As long as possible. Then the other localized business that we can look at, let's say if you're looking at China market, Ping An Insurance is one of those companies that I think they are very localized. Most of their revenue actually come from China, and they are not affected by tariffs per se, right? Of course, if tariff really like get worsened, everyone will get affected.
That's like the economy as a whole slowing down.
Yeah.
Okay.
And if jobs get lost, obviously the renewal rate, the persistency ratio across the insurance industry might get affected slightly. But this is an industry where people will not like cut or drop 50% because they lost their job. Okay, so that's why government also play an important role, make sure the jobs are not lost, and every government will pitch it, they will make sure the job is maintained at the end of the day. So but localized business, again, they are not in the direct firing line between the trade war between the US and the China. So those are the kind of business that you don't need to worry about the trade war. Right, but again, like what Peter said, prices might get affected if there's a global stock sell down.
Okay. Another one I can bring up is I think BYD, the Chinese company. They are the number one EV maker in the world now. But 80% of the cars are sold in China. 2024 figures. So even if like trade wars and stuff like that, a lot of their sales are just in the domestic market. As long as they source the materials, I think most of it is within China as well. Doesn't necessarily come from the US. So another example of a company that has very strong domestic presence and doesn't have to rely on external markets for their profits as well.
So even like if you go to real estate sector, like REITs, for example, we have REITs like Parkway Life REITs, for example. So this is a REITs that own some hospital like Gleneagles, Parkway East Hospital, Mount E, Elizabeth, Singapore. I mean, this is a REITs that their business model is very clear. Right, they lease out their building to Gleneagles, Mount Elizabeth, which is owned by IHH, right, and then they just charge a fixed income. All right, and every year they can actually increase the rent depending on the inflation. And that will give them very high certainty in terms of revenue. So companies like that, if you ask them how does trade war affect them, they will say, what is tariff? What is trade war? Right? They are not affected, right? So you need to, as an investor, you really need to pay attention to the company that you're going to invest, understand their business, because not every companies will be affected by the trade war. Okay, their share prices might get affected during the huge sell down, and this is the time where you would have to take advantage, because if market panic, every good stock in the whole world will get smashed. Right, their prices will drop in every global financial crisis. And these are the companies that you want to put them in a watch list, eye them when the share prices become very cheap. So obviously you need to know when it's cheap, when it's expensive.
So
right?
valuation comes
into a very important play.
But REITs are a good point. I mean, real estate is not land is not something that you import. Unless you're Singapore and then you reclaim land, you import sand. But in general, basically with it's land, it's here in that particular space and country. You're not going to import or export that. That's it. You collect rent. Shouldn't be affected by the trade. Unless the whole economy is affected as a whole, rents could come down. But that's a different thing. It's going to affect everyone. But as a business in particular, has no direct impact. From the trade war.
And moreover, this Parkway Life REITs is a medical REITs, so it's not really affected, risky, right? Or another perspective you can see from here is that if the trade war really worsen, right, the economy goes into recession, the interest rate have to go down, right, to help with the economy, and that will also benefit the REITs, right, because now the REITs are paying a much higher in terms of interest rate. So if the interest rate were to drop, then the REITs will definitely benefit from it also.
Okay.
Right?
So another point. So a lot of moving parts that you need to consider whenever you look at it. So again, you need to like look at the company as a whole, the business model. Not every company is 100% insulated. Some parts of it are more insulated. Some parts are not. So, but as a whole, it's you weigh the cost and benefit. Is a company that's going to be more likely resilient?
Look at their business model. Understand them, because then once you understand, you would be able to tell whether they are affected or not affected. And if they're not affected, then of course you look at the price. If the price is right, then that could be the time to really take the opportunity.
Okay. Maybe you could say maybe not affected, but less affected. Because maybe not many companies are 100% affected. So maybe less affected, and then makes sense in terms of valuation when it makes sense. Okay.
So the next category, of course, you can look at is those companies in a higher risk category where they are now being heavily sold down because of the trade war.
Okay.
Right. So I think we have like footwear industry in the US like Nike, Puma, Adidas, all get beaten down.
Okay.
Right, because of the trade war. Right. So the cost to import a shoe to US now has gone up. Right. Until they negotiate on the rate.
Okay.
Right. Like for example, Vietnam and US agree on a certain rate. All right. But right now, all of them are affected. Right. So now because it's an industry-wide problem, right? So every brand will have to raise the prices.
Okay.
Like I said, right? If they want to survive, they want to keep the margin, and at the end of the day, the consumers will pay for it, right? So this kind of category where there's certainties in this sector is very highly uncertain.
Okay.
Right? And right now, that's why market actually start to punish them, sell them down, P start to derate, right? So one good example would be either Nike or, but I keep it simple, maybe this brand called Lululemon.
Yeah.
Right? So it's a brand that I think all of us are very familiar. I think if you look at, go mall, you definitely will see someone wearing Lululemon pants, and it looks good on them. And it's also very expensive.
Yeah, it is.
Yeah, it is very expensive, right? But most, if you talk to anyone who wear Lululemon, they will like, oh, very good.
It's the best.
It's the best, right?
best,
So you will never wear other brands after, especially it's a yoga pants, right? So they are kind of like become a brand ambassador for Lululemon, and that actually built a very strong brand for Lululemon itself. I think that has been like the case since COVID, and that has been like the wave. And this company, of course, now growth has slowed down, and their items, their market, I think account about 61% America, right? So basically, most of their sales actually come from America, now being affected because the place where they manufacture the pants, Vietnam for example, now the tariff actually become very high. Right? So they have to increase the prices, right? So what the question you need to ask is whether would that affect the US consumers buying Lululemon pants?
Okay.
Chances are pretty high that if their job get lost, maybe they won't buy Lululemon, right? But once this recession over, you look at it for 3 years, 5 years down the road, things might change.
Okay.
Right? People might get their job back, and then they might start to spend back on their money on either Lululemon or Nike. Right? So at the end of the day now, I think this sector now is barely beaten down. So the expectation is very low.
Okay.
Right? And if you look at their PE multiple, it's at all-time low. All right? And it's not that I will want to buy Lululemon right now, but it's a very interesting company that I'm actually looking at.
Because of the price.
Yeah, the price now is like very attractive, and people are like assuming the worst case scenario. And this company has been very well managed. I think they've been like buying back share over the years, and now with the PE at an even lower price, and they continue to buy back, right? That will actually benefit the shareholder.
All right.
Yep.
Yeah.
But I think the thing about Lululemon is I think recently there's also a TikTok trend coming say that in China that say that okay, you can come direct to us. We can manufacture similar quality like Lululemon at probably 10% of the price.
Okay, so it's not exactly Lululemon, but it's just like a
replica.
replica.
And they say that the quality is exactly the same, and they also sort of like maybe claim that they manufacture a bit or something, right, for Lululemon.
Yeah.
And
So like
they're
OEM
asking
kind of
people
thing.
asking the US consumer to direct get from them to be less affected by the trade war.
Okay, but there's still tariffs if you.
Yes, correct.
But still
correct.
cheaper.
Yeah.
Is that what you're
But the thing is, we don't know how much this will affect the brand of Lululemon.
Okay.
Yeah.
But they're not Lululemon.
it's a knockoff.
Yeah, it's a
like an
knockoff, right?
OEM kind of thing.
Yeah.
Right?
And they claim that I think Lululemon, I don't think they manufacture from China. I think they do come from Taiwan also. So a lot of Chinese consumers, merchants actually taking advantage of this, right? So they're trying to sell more product to the US or American consumers. But at the end of the day, like I said, these are more higher risk category. People now beat them down because they are in the firing line of this trade war. They are being affected because now they no longer can import cheap things from Vietnam, so they have to raise the prices, and there's a lot of question mark. Right, but that would be a very interesting bet because hey, look, the valuation is so cheap now.
All right.
Okay, but I'm not saying that I'm going to invest. Right? I'm just that I'm recently looking at it, and then I have to weigh as an investor whether the rewards and the risk make sense. Yeah, and this fashion industry, Lululemon, I'll classify as one of them. Even Nike keep on changing, right? So that's the risk that I have to take into account.
Yeah, what is cool may not be cool.
Yes.
5 years later.
Yeah.
Right.
So
but it's a well-managed company.
Yeah, but I think it's the industry is in distress, like you say, but it's not in the very, very total distress yet.
Okay.
Right. I think the total distress are usually from the peak price. They drop at least 3 times from the divided by 3 from the peak price. That I would say that is the start of the big distress. So that is usually a good time that to. But now I think they are distressed, but we are still monitoring.
All right. So just to be clear, to clarify, this is not exactly a quality that you look out for a company that's resilient in a trade war. It's just that this is like almost like a reverse play where it's so bad or so badly affected that the price makes sense.
Correct.
And then you actually consider it for the turnaround. Yeah.
I think you can buy almost every company if you pay at the right price and you can profit from it, right? I mean, even if you see something like a not really good quality, but still there's a demand for that company, right? Let's say as a demand for the product, and the product is, let's say, value is $50, but sell it for $1. It's a crazy price, right?
Yeah.
Even if you buy at $1, you sell at $20, you still make, right? So there's sometimes that this type of scenario that, and moreover, Lululemon is not got very bad brand, right? I mean, they have like Rusmi said, they have very good branding. The ladies like it.
It's a good product.
They manage the share count very well and all this, right?
Okay.
So if it becomes a bit more, the price is a bit more like ridiculous, then it makes a sense to take the bet, right?
Yeah.
Because at the end, I think it's like what Howard Marks said. Your job as an investor is not to don't take risks, right? If you don't take risks, you're going to get very low returns, right? Your job is to take risks, but you know that these risks are calculated and it gives you a very good reward, right? So we are being paid to take risks, right? Not being
to
paid
avoid it.
To avoid risk, right? Don't avoid risk, but learn how to take risks, but take it in a more sensible way.
That's a good way to put it. Yeah. All right. So far we've covered 3 qualities: pricing power, essential, critical businesses, and also localized businesses. So those are the 3 qualities to look at. And then we've covered basically a category of companies that it's almost like a reverse play. It's a turnaround kind of thing.
And the reverse play is very important, that they must have a strong balance sheet.
Okay.
Right? So in the case, they must have either very little debt or no debt.
Okay, low debt is another quality you want to look at.
So both Apple and Lululemon is, I think, under that impact of like trade war, right?
Okay.
And both of them are financially very strong, right? So at the end of the day, it only makes sense that if the valuation is right, right? So this is the kind of like play where I will classify that as higher risk, but it also comes with higher return, right? I remember that Ulta was one of those companies that affected during the COVID, and the share price I think dropped by 50%. And then people are not going out, people are not putting on makeup, so that will affect their sales. Right? But after the crisis is over, people realize, hey, they still need to look good on the webcam, all right? And after that, subsequently, few years down the road, as the COVID pandemic is over, the whole sales came back.
All right. So just for those who don't know, Ulta Beauty is a makeup retailer, cosmetic retailer, basically. Yeah.
And they were barely beaten at the time.
Because COVID, no one was.
No one was looking at like Ulta. It doesn't make sense for you to look at it at the time. So low debt is important because even though if they could be affected right now, you don't want the company to go out of business. So basically, having very low debt basically mitigates some of that risk because they can ride through this whole thing and still come out at the end of it.
Yes, correct. So I think it's really important to, like Rusmi said, is to look at the balance sheet. I mean, to give another similar example is like Chipotle and all this, right? They were whacked by the scandal for the food, right?
Scary,
But if you go through a lot of history, right, in there people just forget about the food poisoning, the food scandal, right? And Chipotle, before the food scandal happened, right, they are like a darling in the stock market, right? But if you look at their balance sheet at that point of time also, they also have net cash. Their debt position is like 0, right? So in the end, they also ride through the thing, and they get beaten down very badly. The next moment, I think when they hit the bottom, the next 5 years or so, they go up at least 5 times.
Oh wow. Okay.
So it's only this type of depressed valuation will give you a very, very high return when it comes back.
Or what do you call it? An asymmetrical bet.
Asymmetrical bet.
Asymmetrical bet. Asymmetrical bet. All right. So we covered 4 qualities, basically pricing power, essential products, critical products, basically localized businesses, and then low debt. So you want to have a look at a combination of almost all these factors. Of course, the business model for different companies is very different. You still need to understand that, but these are qualities you can look out for. And then even if some of them are really affected by the trade war, you can look for turnaround plays as well. If the valuation makes sense.
If you have a higher horizon in terms of the time horizon.
And you are comfortable taking that sort of risk as well because it's a bit more risky.
I mean, if it's how you size your position. Right. You know that it's very high risk, and maybe you feel that you can recover, but you also don't want to take so much risk. Then you size it smaller position, but you know that when the return comes, it may goes up 5 times, or maybe goes up 10 times, like Chipotle, like go up 5 times the next 5 years and all this, right? That maybe that 4 small percent can build up to become a very big stake in the end, right? So it's you still have the position size properly.
So is there anything else you want to share?
I think we can go on with a lot of examples, but I think you guys get the point.
I think correct.
I think you will need to really understand the company, the business that you are investing, and once you understood that business model, you kind of know that where they are. Okay, either they are affected, the most or the least affected, right? And then at the end of the day, it boils down to the valuation.
Yeah. All
Okay.
right.
So that's pretty much it, and that's why we talk a lot about like watch this. You need to look out for those companies. If the trade war get worsen, it's time to really look at those companies.
Okay.
Yep.
All right. So once again, no recommendation buy or sell any of the companies that we've mentioned during this roundtable. Really for examples, educational purposes when we describe some of these qualities. But again, maybe like a little bit of a sneak peek at what we are looking at. But yeah, no recommendation.
Yep.
Please do your own research, understand all these companies as well. Because if you don't understand what you're buying, it can get really scary when things go south.
Yes.
And you don't know what's up, right? So you need to understand and have conviction with the business that you're investing in.
Yep.
All right. So with that, is there anything else?
No.
Okay. So I hope this was really, really helpful if you're looking at companies that you can put on your watch list during this trade war when prices really come down. What kind of companies you want to invest in, and these are some of the qualities that we are looking at for the business that we want to invest in, want to own for the long term. All right. So with that, my name's Adam. Roseman.
Thank you.
Victor.
Thank you.
Thanks for joining us. Any questions about this, we're happy to answer them in the comment section. Of course, like this roundtable and subscribe. Many more roundtables coming up, and we'll see you again.